Hi everybody, Thomas here at Rebel Income. Where is the big money in the stock market going? It's a question that smart investors have learned to think about no matter what their investing style or preference is. Big money in the stock market is a simplified way to refer to the investing banks, mutual funds, and other institutions that wield the greatest influence on the broad market's direction. While average investors like you and me lack the assets to shift market direction, even on a single stock by ourselves, institutional investors are the ones that make up the largest day-to-day transactions at any given moment in time. Tracking where big money is going can give momentum-based trading strategies insight about where to jump on the bandwagon, as well as the areas of the market to avoid. It's a discipline called sector rotation. Now, as a contrarian and value-driven investor, I pay attention to sector rotation as well, but I do it in the opposite fashion. While momentum and growth-driven strategies focus on where the big money is going, I like to pay attention to the pockets or sectors of the market that big money isn't paying attention to. That's where I often find the best opportunities to find high-quality companies trading at heavily discounted prices. Since I know that at some point the big money is going to shift away from the sectors it's focused on today, jumping early on stocks institutions are passing over right now gets me in at a lower point than most average investors who are going to be climbing all over themselves to jump in after the institutions have recognized the massive discounts those stocks are offering. In today's video, I'm going to reveal the sectors that I think are the most underrated right now. I'm also going to show you a couple of methods that I like to use to identify those sectors. Make sure you pay attention to the end of this video because I'm going to make you an offer that I think you're going to like. Now, before we dive in, I do want to take just a minute to invite you to check out my Rebel Income Patreon page. I publish daily exclusive access content on this page, from stock market reports detailing my analysis and search of the trades I publish for my trade alerts, to lists of underpriced dividend-paying stocks, and even weekly recordings discussing current open trading positions as well as current market conditions. You'll find the link in the description area of this video. Take a look. I know you'll find something you'll be able to use in your own trades. There's a couple of different ways that you can pay attention to sector rotation, and they don't have to be complicated. A lot of people who are familiar with sector rotation tend to overthink the way that it's supposed to work. The chart that I'm showing you right now charts the change in value of the S&P 500 over the past year, as well as each of the 12 sectors that make up the index. I've identified the 4 sectors in the index that have underperformed the rest. You can see their names on the left-hand side of my chart. The biggest underperformer is the utility sector, which over the last year is down about 6.5%. Next is real estate, which is up by just about 1%, followed by consumer staples, which is up about 2.5%, and finally the transportation sector, which is up by a little under 5% right now. All of these numbers pale in comparison not only to some of the highest flying sectors in the market, like technology, which is up over the last year almost 48%, or the index itself, which is up about 25.5% over the last 12 months. That means that these 4 sectors, real estate, consumer staples, utilities, and transportation, as underperformers, may be offering some interesting opportunity to identify the leading companies that may also be underperforming the rest of the market. That means there could be some unrecognized value to be had in these companies. This is one of the first things I always do when I start paying attention to sector rotation, is to look for the sectors that are underperforming relative to the rest of the market. As a fundamentally focused and value-driven investor, I also pay a lot of attention to fundamental and value-based metrics. One of the easiest references for valuation for any stock or even a sector is the price to earnings ratio. The PE ratio, when you're talking about sector rotation, even provides an interesting way to filter through the different sectors of the market to identify the ones that may be the most underpriced right now. We can see there are some differences from what we just saw on the stock chart. While real estate was one of my potential top 4 based on their performance for the last year, they are also one of the most overvalued, with the sector ratio of 1.4, which means that right now the real estate sector is overpriced by roughly about 40% relative to the S&P 500. Technology, healthcare, and consumer discretionary are also all overpriced as well. Industrials, consumer staples, and communication services are all right about at par with the average PE ratio of the S&P 500, which means that they're basically pretty fairly valued right now. That means that you may be able to find some good undervalued opportunities in these areas from stocks that are largely being ignored by the rest of the market, but they're going to be harder to find. The highest probability opportunities based on valuation analysis right now are going to be found in the utilities, financials, transportation, and energy sectors, all of which are trading at significant discounts relative to the average PE ratio of the S&P 500. The energy sector, for example, right now is trading at a relative PE ratio less than 50% of the S&P 500 average. Transportation also less than 50%, while financials and utilities are both in the neighborhood of 65 to 70% of the average PE ratio of the S&P 500. These are the four sectors that I'm going to be paying the most attention to in the weeks ahead. But if you want to combine the technical analysis that I just talked about with this PE ratio driven analysis, we can also take the fact that both transportation and utilities are among the worst performers in the market right now to focus on those two specific sectors. And that will refine your analysis even more to identify stocks that are likely to offer attractive valuations at current prices. The next question is, how do you start to identify those stocks? This is where the offer that I mentioned earlier comes into play. I've sorted through the utilities, financials, transportation, and energy sectors to identify all of the stocks in these sectors that currently pay dividends. And I'd like to share the lists of those stocks with you. All you need to do is sign up for any 7-day trial on my Patreon page. As soon as you do, I'll email you the list of the stocks in all four of these sectors that pay dividends and that I think may be offering some interesting valuations right now. Thanks, everybody. I hope you found this video to be useful. If you like this content, please go ahead and subscribe to my channel by clicking on this link right here. You can also learn more about the Rebel Income System by checking out this video. Thanks again. I'm Thomas Moore at Rebel Income. I'll talk to you again soon.